Good day, everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'm the founder of Senex Digital Lane, where everyone who has a knowledge gap in digital trading can get the right knowledge, get the right guidance, and also get the right tools and enable them to trade the financial markets profitably. So today we are talking about the market fundamental and technical breakdown for the time period of 24th of February to the 28th of February. How this goes down is that we'll first of all talk about the technical charts. We'll be looking at Forex pairs like Euro USD, AED USD, and also be looking at commodities and also be looking at cryptocurrency like BTC USDT. So I want you to watch the end because once we get to the end, we'll be talking about the fundamental analysis, which has to do with the geopolitical events, the macro news like interest rates, inflation rate, employment data, retail sales, and so on and so forth. So we'll also be giving you guys some opportunities and some updates regarding the financial market. So watch to the end. I'm sharing my screen right now so that you'll be able to see the technical charts, and then we can then move on from there. Right now, this is USD, Euro USD. And before I analyze this week's data or technical chart, I'm going to show you guys last week's technical chart. And this is the technical chart also as was respected our profits. Just the market is currently at a supply zone. Okay. So literally, we already did the top-down analysis from the monthly time frame. Now I'm moving up to the weekly time frame. Okay. So we need to first of all change the high. So we need to update it to the current week, the last week's high, and then this was the previous week low, and we need to update it to this. That the monthly time frame is a bullish candle. Okay, if you go down to our previous video, for is you see the good sign trend for more push to the upside. So that's what I see. And prevailing trend, you can see it's an uptrend. Well, currently just demand and supply. We need to update it from this previous red candle to this current red candle over here. So we update was this black candle here. So we updated it to this one. Then the supply zone remains the same because there is no break yet. This supply has held the market consistently. Okay, now with that said, let's go down to the the 4 hours time frame. Is top down. This was our previous week demand. So if I'm to update the current 4 hours demand zone, this should be the current 4 hours demand zone. So this is what I see over here. The supply zone came into it, and now it is going to the downside. So what I see for Euro USD right now is a push towards the demand zone target we spoke of before. Okay, so this is possible, and also this is highly possible. Okay, USD. Then the next pair on our list here is AUD USD. So for AUD/USD, we had our forecast for last week. Our forecast for last week to come towards it, but the market never did to the upside over here. Supply zone to continue the push to the upside. Literally, from this view, I already have forecast AUD/USD structures in the market. So when I say update the current structure in the market, previous week low to beat this current. This was the previous week low to this last week's low. So that's what I'm just trying to do, update it. Okay. And then this is the previous week high. Okay, so this is it. So then we'll go down to the daily time frame. On daily time frame, what's a bullish trade correction for another impulse to the upside, bullish. So let us look for, so on the current daily demand, this still sticks, okay? But due to this particular zone here, is also a red candle, and it held the market consistently before this break to the upside. I could probably move my positions one over here, this one over here. But if still move down, I'll have to update this to now be the daily. The pullback is needed. This pullback is needed. So for the supply zone, it is supply zone to this region. Okay, moving the supply zone to this region. Yes, that's what we're moving the supply zone to. Then we'll move to the 4 hours time frame. So let's update the 4 hour reoptimization zone now. Since the market already broke it, it just needs to reoptimize. Okay, after it reoptimize, then we will know the next move for the market based on the reaction it plays out there. But for the B I currently see is this particular zone here. It's quite far. But markets can get there. The candle, this is the particular candle. This candle over here, this one. So with that said, what I see for AGS, if we should have a little pullback, I would as well label this as now a demand zone. This red candle over here. I'll label it as a demand zone over here. Good. So I have just to slip towards the demand zone and optimization zone, okay, and follow, and from here start moving to the upside. But one thing for sure is that we're waiting for what the buy bias. Any buy setup we get at a discounted level, we'll be taking it, okay. So that's what I see for AUD against the dollar. So then the next on the list is gold. Okay, so for gold, this was our forecast for last week. We told you guys for last week that gold is going to move from here, from this demand zone, and then exactly gold did this. And this was the only trade I took on gold for last week. It was just on Monday, I took the buy. The market ranged a Y, but on Tuesday, it hit our target. And every other thing for gold, I just ignored. Every other thing for gold, I just ignored. So let's update the current structure on gold. Let's start with the weekly time frame. So the weekly time frame, we just have to update the current week high. This is the previous week high now, and this is now the previous week low. Good. So after that, we'll go down to the daily time frame. On daily time frame, we spot out daily demand and daily supply. So for the daily demand, I'll have to spot out with this red candle over here. This here. Why is because I see that the massive rejections there. So that's why I have to spot that as a daily demand. So for the daily supply, we currently don't have a daily supply because the market is on an all-time high. So now let's go down to the 4 hour. We see that there was a change of character. 4 hours time frame is telling me a total different story. Let me show you guys. Over here is a market structure break on the 4 hours. Good. Market structure break on the 4 hours. And let's just say liquidity was taken there. And if I am to track this properly, this is where my demand zone should be on the 4 hours. Exactly. This is where for the futures, and this is where exactly where the this is its 4 hours demand zone. So this is what I see for gold to activate and move up. My overall target for gold is the $3,000 per gold mark. $3,000 per gold mark. I've read it from different articles, bank articles, and so on and so forth. So this is the target. Okay. Okay, so this is possible, and something that is possible is just a buy. Because market is all about probability, you know. There is a demand zone here that is holding this market. This is the demand zone, this candle here. There's a demand zone there holding this market, okay? So you check it out. Let's check it out and see for ourselves. So you see over here, the market broke this high. After broken, it broke this high with this candle, okay? High that broke this. This high was broken. There was so this has and demand, yeah, at 2, 3. So there is high chances that this is just the demand zone wants to use to go up. Okay, why I'm saying this is because a lot of people want to buy gold. Why? Uncertainty of the new policies imposed by the new president of the United States of America. Okay, so everybody is just trying to go to a safe haven asset. And if you can see, gold is one of the safe haven assets. Since 2025, it has just been creating new all-time highs. Unlike what is going on gold, that was what we expect. My bias for gold right now. This is my bias for 3,000, or have a little pullback towards the demand zone. If it comes back, this is as a massive premium level, and we can then take the buy from here. Then the last on the list is BTC USDT. So for BTC USDT, our forecast for last week was for a buy. Yes, I can remember it was on a Monday. It was on a Monday, and I called out a Bitcoin trade live. I was like, we are at this level, and I called that a buy for Bitcoin, heading towards the target of $100,000. But it didn't get to our target of $100,000. Okay, you can check it out. The signal is on the last video uploaded on our YouTube. Okay, we didn't get to our target, but after it pushed back down. Okay, so literally, let's update the current week. Okay, so on the weekly time frame, I have to just position the market at the previous week high and previous week low. This is the previous week high, the previous week low. Then I go to the daily time frame, and after I go to the time frame, I'll have to the prevailing trend. You can see the prevailing trend is an uptrend as at November 5th, after Trump, a massive consolidation. Consolidation is just ranging markets, accumulating back what I was seeing. I'm seeing accumulation from institutions, leaders accumulating what BTC. Okay, so this is what I see on the prevailing trend area for BTC USDT on the daily time frame. Meanwhile, I already spotted the daily demand. This is daily demand, and this is the daily supply. Then I go down to the 4 hours time frame. Once I go down to the 4 hours time frame, I want to spot out the 4 hours demand and 4 hours supply. This is the 4 hours demand over here. This is the last red candle that broke this high. So it's the 4 hours demand, okay? And then supply, okay? So, but let me show you something that you guys haven't seen for some time. This is February's movements. This was the candle that gave birth to February. Then February dropped. After that, it came back towards that candle to take some liquidity of those who missed this downward push. This is what we have been experiencing for Bitcoin, just a range. So literally, from what I can see, we don't have a prevailing trend. We are ranging. Okay, so whatever we're doing, we maintain the target within this range. Within this range. So what I see for Bitcoin right now is that I need to push down towards, there's a demand zone here, it needs to go and fill. This premium level is going to be within this range. So that's what I see for BTC. I want to pull back towards the demand zone, okay? Then we'll take our buy, and then we're taking our profits within this range. And also the principle of trading in ranging markets is that try in 50% of the range. This is a Fibonacci 2. So literally, you can also be aiming just to take your profit at 50%. Once we get a buy here, I'm taking our profits 1 year, 1 year. Once you take profit 1 year, you can break even, take the final profit at this supply zone. Exactly. So that's what I see for BTC. So if you want to learn more on how to trade the market, okay, just go down to my link tree. Okay, the link tree is on the description of this video on YouTube or any other social media handle. You can be able to get access to our store. You see, you can visit the 10x Digital Link store by Anthony Phillips Njoko on seller.co. Once you visit the store, this is what you gain access to. The store is seller.co/m/click to cart. Okay, so make sure that this is the exact store link you click on. Don't click on any other thing, okay, or any other store. So that's the link for our store, and you can get it on our link tree. On this link tree, you can also get schedule a Zoom meeting with me, the master trader, one-on-one meeting. You can ask me questions about your current trading conditions, about your current trading knowledge, okay, about our products and services, about our signals. I'll break it down for you so that you can understand it and also guide you through the right process to enroll for any particular product or service, okay? Over here are all our social media, YouTube channel, the recommended Forex broker, HFM, XNext, and crypto broker, Binance, KuCoin, and other tools we use. Like I told you, 10 Digital Link is where you get the right tools. So we offer you TradingView, CoinMarketCap, getting funded $50,000 from 10Trade, one of our recommended Forex prop firm. Then Forex Telegram group where we offer you free signals, okay? You can join this Telegram group right now today. And this is our crypto group where you get crypto signals and crypto airdrops that can pay you out up to thousands of dollars. I'm telling you, thousands of dollars. So don't miss out on this. Then this is our WhatsApp group, okay? And this is our TikTok page, Facebook community, Instagram, Twitter, wherever you seem comfortable, LinkedIn, just go and join us there. You'll be getting updates back to back, okay, on what we are currently working on. So this is our store. Like I said, if you want to visit our store, just click on the link tree. It will give you access to that link tree, and then you visit our store. This is one of our free products, how to become a passive income machine. We will touch on how you can start making money from the Forex markets passively. This is our crypto products. These are crypto products. On this crypto products, these are real estate products. On this real estate products, you'll be taught about how to make money on real estate with short-let properties. It's just a basic intro, okay? Also, this is a basic intro. These are our signal group. We want to join the VIP signal group. This is the payment link you need for the VIP signal group. And then this is my book I wrote, Forex Mastery, a guide to trading success. It helps you know the basics, helps you get the right psychology, and helps you practice the right process. Then over here is what our courses. If you want to join our courses, for a lot of you that are curious, how can I join your academy? Okay, you can either join our academy from our website or through this link. And once you visit this link, you get the updated price for the 1 month, 3 months, 6 months, or 1 year package. Or if you feel more comfortable, because I just spoke to a few students I met last week from Zimbabwe. They said that they feel more comfortable signing up on our website. Just go to the website www.10xdigitallink.com. Okay, and this is exactly how the website looks. This is our website interface. This is me, the CEO, and our team. Then these are our products for the 1 month, 3 months, 6 months, and also 1-year products, okay? So don't miss out on it. These are some of the testimonies like Ogen Naya says, I still remember what you told me that time. Everything, I'm still sticking to all of them. And this is Sistus. I love how easy it was to get started, especially with all the tutorials. I quit my second job with the income coming from 10x Digital, 10x Crypto Academy. So this is the value you get. Don't waste time anymore. Procrastination is the thief of your time, okay? You can join our community and enroll for some of our free contents, the crypto airdrops that are paying, okay? Use our free signals, make some money, then upgrade to a VIP service. In the VIP service, you'll be treated like royalty. Don't miss out on it. So over here is the fundamental breakdown. This is Monday, February 24, 2025. Okay, by 10 a.m. West African time, which is in 31 minutes time, we have the IFO business climate. Okay, this has to do with the business conditions in Germany, to be precise, and this has to do with if the businesses in Germany think that the economy is going to be better or it's going to get worse. That's just what it means. Okay, so the previous one is 85.1. And they are expecting it to be 85.8. Okay, the previous one is 85.1. They're expecting to 85. If it turns out to be 85.8, it is good for Germany. Okay, it's good for Europe. But if it turns out negative, it is bad. Once it gets bad, then we should expect what weakness from the euro. Then by 11 o'clock today, we have CPI for Euro Central, which is a high impact news. Okay, it has to do with inflation. A higher inflation makes the currency strong. A lower inflation makes the currency weak. The previous figure is 127.07. They're expecting to be 126.71, which is bad if that is true. But by 11 o'clock, whatever figure we get, if it is higher than 126.71, it is going to be what? Good for Euro. But if it is lower than 126.71, it is bad for Euro. Then on Wednesday, no news, no impact news for Tuesday. On Wednesday, we have the monthly CPI indicator for AUD. Okay, it has to do with CPI, January for Australia dollar. Okay, over here, they're saying it is 2.5%. They're expecting to be 2.5%. If you get anything higher than 2.5%, it is good for AUD. But if you get anything lower than 2.5%, it is bad for AUD. Then we have at 8 a.m. on Wednesday, London session, consumer confidence. That's to do with the consumers in Germany, to be precise, those who earn income. Are they spending their money or are they hoarding their money? That's just what it means, okay? What is the confidence of people? Over here, it is minus 22.4, okay, in Germany, okay, previously. And they're expecting to be minus 21.1, which is higher than minus 22.4, okay? So if you get minus 21.1, it is good for Germany on Wednesday. If you get anything higher than minus 21.1, like minus 20, it is good for Germany. But if you get anything lower, like minus 21.9, it is bad, okay? Or minus 22, it is bad, okay? So that would make Euro to be weak or strong. So watch out for it. Then by 10 a.m. London session on Wednesday, we have the Bank of Austria Manufacturing PMI, the increase in price, production price, or reduce in production price or manufacturing price. So this is the previous is 45.7 and expecting to be 46.5. If you see a figure higher than 46.5, it is good for Euro. If you see a figure lower than 46.5, it is bad for Euro. If you see exactly 46.5, it is good for Euro because it is higher than the previous of 45.7. Then London session, we have new home sales, and then we have new home sales month over month, January. Okay. If there is more home sales, there is more revenue, there is more distribution of commissions, and then the currency will be strong. Okay. So over here, it is 0.698 million. They're expecting to be 0.69. The 8 is missing. So this is bad for dollar. At first sight, it is bad. But we see something higher, like 0.7 million. Okay. Good for dollar. Then the new home sales month over month, this is now measured based on percentage. The previous one is 3.6%. They're expecting to be minus 2.6%, which is bad for dollar. If you see anything higher than minus 2.6%, probably at the region of 4%, just higher, okay, we need to see strength in dollar. But if it is lower, then dollar should be weak. Then on Thursday, no London session news or New York session news by 2:30 West African time, all relating to dollar. And then based on this now, the most important ones are the GDP, okay, growth rate, okay? So the growth rate here, you are expecting to be 2.3%. If you see anything higher than 2.3%, it is good for dollar. Anything lower than 2.3%, it is bad for dollar. Exactly 2.3%, it is bad for dollar because it is lower than the previous of 3.1%. Then we have the initial jobless claims. That's the next important one. It has to do with those who are filing for jobless claims insurance, okay, benefits, okay. Over here, it is 220K, which is higher than the previous of 219K, which is bad for dollar. If you see a figure lower than 220K, it is good for dollar. If you see a figure higher than 220K, it is bad for dollar. The same applies for the jobless claims for with average, the continuous jobless claims. And then the durable goods order has to do with those who are ordering for products and services from companies, okay. A higher figure is good for the dollar. The lower figure is bad for the dollar. Then to wrap up the week on Friday, we have retail sales year-over-year for Germany, retail sales month-over-month for Germany, retail sales year-over-year for Switzerland, then retail sales month-over-month for Switzerland, inflation rate year-over-year. And then from this inflation rate up to this retail sales, any figure we see that is higher than all the figures here, it is good for euro and Swiss franc. But if you see a figure lower than every figure here, it is bad for euro or Swiss franc. What I mean is this, in summary, if you see something like 2.2% for the retail sales, it is good for euro. If you see 2.0%, it is bad for the euro. The same applies for every other figure here. Then for the unemployment rate, if you see a higher figure like a higher figure than 6.2%, it is bad for euro. If you see a lower figure, than 6.2%, it is no, I meant that if you see a figure higher than 6.2%, it is bad for euro. But if you see a figure lower than 6.2%, it is good for euro. So that's what I meant. Then every other thing here is just explain the inflation rate, how it is used. Everything here is just London session. Then to wrap up the week on New York session, we have GDP for Canada. Okay, a higher GDP is good, a lower GDP is bad. Then for New York, exactly, we also have USD, personal income month-over-month. A higher figure than 0.4%, it is good. A lower figure than 0.4%, it is bad. Then we have the core PCE price index month-over-month, personal spending month-over-month, and then the price index year-over-year, and the goods trade balance. Everything here is what based on higher. If you get a figure higher than 0.3%, it is good. A lower is bad. Personal spending month-over-month, higher than 0.2% is good. Lower, it is bad. And then the price index higher than 2.7% is good, lower than 2.7% is bad. Then the good trade balance has to do total imports minus total exports. Okay, if there is a positive in exports, then it is good for the currency. But if there is a higher imports more than exports, it is bad for the currency. So based on what I can see here, we had a trade deficit. Yeah, trade deficit of $122.11 billion, but it improved. Analysts are saying that it will improve to 114.7 billion, which means that exports were more than imports. Okay, there is going to be a trade surplus when there is massive exports going on in your country, but there's going to be a trade deficit when there is massive imports, which means that you still have some debts to pay back to the countries you're importing from. So this is literally how I see this market playing out. Okay, so I wish you guys a profitable trading week. Thank you for watching to this end. And this is your guardian, Anthony Filisojoku, wishing you a profitable trading week.